Okay, hello everyone. Today, in our unit about credit cards, let me go back to last time actually. Last time we talked about how to calculate your account balance. Today we're going to talk about how to calculate or predict what your finance charge should be, using a method called the unpaid balance method. What this entails, the definition of the unpaid balance method, is computing or calculating the finance charge on a credit card based on the portion of the previous balance that has not been paid. And one other term you need to know for this, and we've talked about it already, is the periodic rate. Now, the periodic rate is the monthly finance charge. And we probably should define finance charge again, just in case you forgot. A finance charge is like interest that you have to pay, so it's not good. You don't want a finance charge. You're losing money on a finance charge. You incur or you get a finance charge if you don't pay off your entire credit card bill at the end of a billing cycle. If you just can't pay everything off the credit card company says, okay, that's fine, but now we're going to charge you more money because you weren't able to pay it off. Okay? Today we're going to talk about how to calculate that finance charge. So, the equations that we're going to need are very straightforward, and I'll show you how they work later on. But to find the unpaid balance, this one's kind of common sense. You take your previous balance, subtract any payments or credits, any payments that you've made to the credit card company, so paying off some of your debt, or credits if you return any purchases. So you take your previous balance, subtract any payments or credits. Now ideally, that would leave your unpaid balance at zero. You pay the whole bill off. But if you can't pay everything off and you're left with some unpaid balance, then the finance charge that will be assessed to you is the unpaid balance multiplied by the periodic rate as a decimal. And then finally, your new balance, how much you now owe, will be your unpaid balance plus that finance charge we just calculated, plus any new purchases you might have made. So let's see how this works. Number one, a portion of Lucille Sherman's charge account statement is shown in the figure below. The monthly finance charge is 1.5% of the unpaid balance. What is the new account balance? So we want to know she's not paying everything off. Okay, that's the important thing here. So she's going to get a finance charge. And we want to know, well, based on the finance charge and any new purchases that she's made, how much does she still owe? So step one is to find the unpaid balance by subtracting out payments and credits. We see her previous balance is right here, $132.40. She paid, and you can see it listed in two places, okay? You're only going to use, it's only $40 worth of payment. She paid $40. You're not going to add these two together. That's not right. Anyways, sorry. You're going to take the previous balance and subtract any payments and credits she made. So that means doing this, $132.40, her initial previous balance, minus $40 equals $92.40. That is her unpaid balance. That's just how much she hasn't paid off yet. So I'm even going to write that in right here, $92.40. Now we can calculate her finance charge. The credit card company is going to say, well, you didn't pay your whole balance off, so we're going to charge you, we're going to give you a finance charge. Essentially, it's like making you pay interest on the money that you haven't paid yet. Okay, so you're going to end up paying more. We want to multiply the periodic rate, 1.5%, by the unpaid balance. The unpaid balance is what we just figured out. It was $92.40. We need to multiply that by 1.5%, but before we can do that, we need to take 1.5% and turn it into a decimal. Remember how to do that is take 1.5, divide by 100. So we get 1.5% is really like multiplying by 0.015. We multiply that by $92.40, and we get a finance charge of $1.39. We're going to round that up to $1.39. So what that means is because you didn't pay everything off, you now have to pay, in addition to your unpaid balance, an extra charge of $1.39. That's all a finance charge is. In addition, you made new purchases of $79.55 in this previous billing cycle. So the new balance, we're going to add the unpaid balance, $92.40, plus the finance charge, $139, plus any new purchases, 92.40 plus $1.39 plus 79.55 the new balance for this person, for Lucille, is $173.34. That is now what she owes after we take into account the new purchases she made and that finance charge she incurred. Okay? So, this method can be used to predict how much you're going to owe on your credit card bill. Why do you want to do that? You want to do that because you want to make sure that the credit card company is charging you the correct amount. You don't want them to be charging you more than you actually owe. Let's do a couple more examples. Okay. Example number 2. Alejandro Martinez has a charge account that uses the unpaid balance method of computing or calculating finance charges. The periodic rate is 1.85%. If his previous balance is $478.68 and he had payments and credits of $250, find his unpaid balance and finance charge. If he then has new purchases of $38.50, find his new balance. So let's do the unpaid balance first. Unpaid balance is simple. It's the previous balance minus any payments and credits. Previous balance was $478.68. We're going to subtract from that the payments and credits. He paid this much of his bill, $250. And what does that equal to? 478.68 minus 250. His unpaid balance, what he still has to pay, is $228.68. But wait, because he didn't pay everything off, he also incurs a finance charge. The credit card company is charging him more money because he didn't pay everything off. He didn't get them their entire payment, so they're charging him extra now. The finance charge is 1.85% of the unpaid balance. We need to figure out what 1.85% is as a decimal, 0.0185, and we need to multiply that by the unpaid balance. So that would be $228.68 times 0.0185. And rounding to 2 decimal places for the number of cents, we get that the finance charge is $4.23. Now, what is his new balance? His new balance is equal to the original balance, the unpaid balance, plus the finance charge, plus any new purchases he's made. So in this case, his unpaid balance is $228.68. We're going to add on to that the $4.23 for the finance charge, and his new purchases of $38.50. We're going to add all those together. He now owes $271.41. Now obviously let's compare that. What if you didn't have that finance charge? Then he would be paying less money. Okay? But the key here is that the finance charge, you don't want finance charges. You want to try and pay everything off as quickly as possible, as quickly as reasonably possible. Last example, it's going to be the same sort of thing. Jesse had a previous balance of $390. He had payments and credits totaling $225. The periodic interest rate is 1.5%. He then had new purchases of $60.98. A, what is his unpaid balance? Take the previous balance, subtract out any payments he made. So this is him. Remember, we're talking about credit card companies. So payments means you're paying off that debt. That's a good thing to have these payments. Okay? It means you're paying off money that you already owe. 390 minus 225 is $165 for the unpaid balance. He didn't pay everything off, so he incurs a finance charge. Finance charge is 1.5% of his unpaid balance. So 1.5%, again, we got to convert that to a decimal. 0.015 times 165. Ooh, be careful with the rounding there. That 5 is going to make this round up. His finance charge is $2.48. Okay, that's money he's getting charged because he didn't pay off his entire bill. His new balance is going to be the unpaid balance plus the finance charge plus any purchases he made. He made $60 worth of new purchases with his credit card. So his new bill is now $228. I added those wrong. $2.48. I don't know why I wrote 5. My bad, guys. 60.98. Okay, there we go. His new balance is $228.46. That's how much he now owes. So, finance charges are actually pretty straightforward. None of the math is that hard. You just have to follow the rules. There's 3 steps to it. Find the unpaid balance by doing previous balance minus any payments and credits you made. If the unpaid balance isn't zero, then we need to calculate a finance charge. Take the unpaid balance, multiply by the monthly or periodic interest rate. Then finally, find the new balance by adding the unpaid balance, the finance charge, and any new purchases that were made to get how much you now owe, the new balance. If your unpaid balance is zero, guess what? You don't incur any finance charges, so that's really nice. Okay? If anyone has any questions with this, please don't hesitate to get a hold of me. I'm more than happy to explain this again. I hope everyone's having a good time. I hope you're being able to get outside and enjoy some of the nice weather we've had. Please let me know if you need absolutely anything, and until I talk to you guys again, I'll see you later. Bye.